Are you looking to retire as soon as possible so you can enjoy with your loved ones? Well, today we'll dive into an exciting topic that many people dream of, which is how you can reach the financial independence and retire early. That's right, we're going to explore different steps that you can follow if you want to secure your financial future and potentially retire before the traditional age. So, if you're ready to take control of your own personal finance and finally live the life that you have ever dreamed of, well, let's get started. But before to see what are the best strategies for early retirement, you need to truly understand what does the financial independence means. Financial independence is a state where your total assets and investment will cover your total cost of living, which will give you the choice whether or not you want to work. So it is about building a nest egg that will work for you. Now that you know what you need to do to achieve this dream, let's take a look at some of the most important steps to reach it. And so the first step is to define your different goals and create a plan to reach them. In order to be successful in life, you need to have great challenging objectives with a great plan to reach them. So on your side, I would recommend you to first start by setting clear and specific objectives that you need to reach, starting by defining how much money will you need to sustain your future lifestyle, because in fact, some people will want to have a more glamorous lifestyle in the future and some people will be more minimalist. This means that on your side, you'll need to start by analyzing what is your financial situation, so what are your different income, expenses, assets, and liabilities. And to do that, I would recommend you to do your own budget, but if you don't know how to do your own budgeting, well, check out the video that I made on the subject. Afterwards, you'll simply have to create your own plan on how you'll make more money, how you'll save more money, and how you'll be able to invest more money. And this leads us to the second step, which is to save aggressively. The key to retire early is to be able to save a massive portion of your total income. Indeed, just by starting to save a little bit more money on your paycheck can have a massive impact on the long run, because $1 right now will worth a lot more money than it will do in 30, 40, or 50 years from now. And usually the big pros of being young is that you don't have any big expenses ahead of you because, for example, you can live at your parents' house and you might only have, for example, your car or some different small expense to pay. And it is why I would recommend you that if you are young, try to save as much money as you can while you don't have any big expenses to pay. Because a single mom that has 2 kids to feed and a big mortgage to pay won't have the same saving capacities as an 18-year-old kid that doesn't have any big expenses. A great global objective that I would give you is to try if you're able to save at least 50% of your total income. This means that you might have to cut all the unnecessary expenses. For example, if you have the bad habit to go eat at McDonald's 3 times per week, well, you could simply go eat at McDonald's only 1 time per week. Adopting a frugal lifestyle as well as focusing on your long-term objective and not only on the short-term gratification can be very beneficial for you in the future. But unfortunately, saving alone won't get you where you want to go fast, but you'll also need to invest wisely. As important as it is to work to make a lot of money, it is also important to make the money works for you. In fact, Robert Kiyosaki has described this phenomenon perfectly in its book Rich Dad Poor Dad by saying that the richest are the ones that will accumulate assets that will pay some cash flow for their different liabilities. And so instead of buying great assets, the poor will tend to buy a lot of liabilities that will be financed by their total income. If you want to start invest, I would recommend to anyone to start by investing on the stock market. It can be either in stocks, bonds, or ETFs depending on your time horizon and your risk tolerance. But it is also essential for you to take advantage of the great retirement accounts that are available for you. For example, the 401ks in the US and the RRSP in Canada. But you also have great gift from the event like the tax-free savings account over here in Canada, which give you the possibility to grow your money completely tax-free. And so you simply have to put different investments in this kind of account, and all the total income and the total interest that you'll be making in that account will be fully tax-free. But keep in mind that you have a maximum annual contribution in your TFSA that is only available for 18 years old or more. The usual rule that I would tell to any Canadians that hesitate between the RRSP RRSP and the TFSA is that if you have a low income, for example, let's say less than $50,000, well, you can first prioritize your TFSA, and if you have a net income of more than $50,000, you can go and prioritize your RRSP. And this can give you the possibility, if you have a net income, to reduce the total tax that you will pay. After, when you start to have accumulate a certain amount of assets, you might want to go and invest in real estate. This is the process that I am currently working on while I am trying to look for the best real estate property to buy at the moment. And the big pros of buying real estate is that it will obviously give you great passive income flows by also giving you great capital appreciation over time. Keep in mind that real estate is creating the most millionaires every single year. But obviously, if you want to reach financial independence and financial freedom faster, you can either decide to save more money or also to make more money. Indeed, there are many ways that you can increase your total income. You can either decide to negotiate for a raise at work. You can also create your own side hustle to make money from the comfort of your house. Or you can also invest in your skills to reach a higher paying job. There are no shortage of possibility if you're willing to put out the work and find a place where you're good at and that you have great knowledge about. And most importantly, if there is obviously a big need for that particular knowledge, well, it might be a great opportunity for you to make some extra money every single month. For example, me personally, I wanted to use this YouTube channel to share with you my knowledge and my personal experience that I've built throughout the last year as a financial analyst, but also as an investor that has learned a lot throughout the last couple of years. And with the financial master that I have gained, I want to simply use all the knowledge and the experience that I've built through time to help others with their financial journey. And now, the fifth step that you need to follow if you want to reach financial independence as soon as possible is to optimize your taxes. Minimizing your tax liability can have a massive impact on your total savings. Indeed, let's say that you're able to double or even triple your total income, well, it will also make that you'll be even more taxed. And it is why it can be very interesting for you to reduce legally your total tax burden, and it can be by consulting great financial specialists, but it can also be to take advantage of great tax credits, tax deductions, and great retirement savings account. Plus, if you're starting a new side hustle that will pay you a lot of money, it can be very interesting for you to learn the big pros of being incorporated. Finally, the last step towards financial freedom is to continuously monitor and adjust your plan. Achieving early retirement obviously requires a lot of hard work, but also a lot of discipline to track and to evaluate all the progress that you've made. It is why reviewing your investments, tracking your spendings, and also to make some global evaluation of your overall strategy can be very interesting for any investors. For example, you must be ready for all eventualities, especially on the stock market where you don't have control over everything and where some years will be absolutely horrendous just like 2022 and some other years just like 2020 will be absolutely insane. The key here is to be able to prepare and also to adapt to all the possible worst scenarios that could happen to your retirees portfolio. And there you have it. Those are 6 steps that you can follow if you want to reach an early retirement and reach the financial freedom and independence. Remember, the journey will require a lot of sacrifices and patience, but the rewards at the end of the day will be priceless. But now on your side, you might be wondering, hey, but Louis, how can I see where I am currently ranking among the other people of my age in terms of net worth? Well, to see how you currently rank among the same people of your age, check out the video that's gonna be right over here, and I will see you soon. Peace!